you so much for joining us tonight. I know that there's probably a lot of places and a lot of things that you could do instead, so we don't take it lightly that you are joining us and joining this discussion on a really important topic. There's quite a lot of people joining. So first, I would like to introduce myself, just a little bit about me and about Kontakt Source in general. For those of you that don't know, my name is Marianne Halverson. My day job, I'm an insurance broker, so I know quite a bit about IPO and the D&O space. What I've built, Kontakt Source, is a side business that I started. In reality, it's nothing rocket science. I just have an incredible passion about connecting people to who they want to meet and people to grow their business. So we do it here in New York. I have a loft in New York, and we do these events on a regular basis. During COVID, we come up with it virtually, and like we already know, like the world seemed to become even smaller due to all of us in our lockdown, and just a testimonial right now that 9 people registered for today's discussion. So that's really how this is our first that are sort of across the boundaries of the world. So what we're going to do, and I'm going to try to do this really effective and quick. So treat this as a networking event. We sent you guys a list of everybody that is on this call. We all know that networking doesn't happen at the actual event. There's a lot of great people on this call. And I want to thank everybody for whoever invited and wanted to bring some really good thought leader into this call. In order for you to participate in this, you got to have your camera on. So I'm going to call each name out, and you get to say your name. You get to say where you're from, like your name, your company, and where you're from. And it'd be great to get a feel of everybody's in the room. Know that we're also recording it, so be aware of that as well. Also be aware that you are on mute. If you haven't figured out, I have you Swan. He's an analyst with Kontakt Source. He's gonna, if you can't figure out how to take the mute button on, he will help you and he will take the mute button off. If I say your name wrong, I apologize ahead. You can easily, quickly correct me if I do. So we'll start with Tino. Go.
Hi, my name is Tino. I founded a startup. What we do is we make custom furniture designed on an augmented reality, and we deliver it in a couple of weeks, anywhere in the world.
And where are you located?
Normally in New York, but recently Ohio.
Ohio, great. Jean-Luc? You're on mute, Jean-Luc. Okay.
Jean-Luc Park. So in the DC metro area, I have been an impact investor, currently doing a startup for an investment bank.
Great. Bob?
Well, assuming you mean me, Bob Mew. I'm the gray hair in the room. I've been in the industry for over 40 years. Was a founder 30 years ago of Sutter Securities, and now an associate of Dan McClory.
Oh, great. Nice to have you. Vincent Wong.
Vincent Wong with Nauticus Partners. We're a capital markets advisory group based in Vancouver, Canada.
Thank you. Great. Frank, Sid.
Yes. Hi, Fred Wong here. I founded my own consulting company in the beginning of 2020 and focusing on cross-border investments between China and the US. Before that was with Star Companies, another insurance guy, for 7 years doing similar things. I'm based in New York City.
Yeah, thank you, Fred. I'm just going to remind everybody just your name and what you're doing currently and where you're at. Great, thank you. We're going to go to Frank Sid.
Hi, Marianne. Hey, Dan, how are you? It's Frank Sid in New York, and I just recently started CrowdChain, a crowdfunding portal, and Monolith Capital, a broker-dealer here in New York.
Great, thank you. Nice to meet you. Ron Ainsworth.
Yes, my name's Ron Ainsworth. I'm one of the principals at Bowstead. I have the pleasure to work with Dan and his team, and I'm here in Newport Beach.
Newport Beach, great. Steven Singer.
Hi, I'm Steve Singer. I'm in Silicon Valley, and I consult with a lot of different family offices on tax and finance.
Awesome. Thank you. Nice to have you here. Rob Colorino.
Hey, Marianne. Rob Colorina here. I'm a director with an equity group called AIAC. We're in 24 countries. I have an office in New York, but I'm calling from coastal Virginia, and we're pleased to be clients of Aon, Willis Towers Watson. So I just wanted to sneak that in, Marianne. I look forward to the discussion. Thanks to some of the guests for coming as well.
Thank you, Rob. Regina Long.
Yeah, hi, this is Regina Long, based in San Francisco. The partner of Tonic Bioventures is a life science venture fund, investing in both therapeutics and medical device.
Oh, great.
Thank you.
Nice to bring. Benoit.
Benoit. Ben.
Benoit. Thank you for that correction.
Ben Invest, alternative investment, and Ben Invest family office, headquartered in New York, where I currently am.
All righty, great. Akshay?
Akshay Vallani, partner in the corporate department at Stroke and Levan, which is a national law firm based out of New York.
Steve.
Steve Markscheid. I'm based in Chicago. I'm an independent director on the boards of 4 publicly listed Chinese companies. I met Dan in San Francisco in January, and thank you for hosting this event.
Thank you, Steve. Paul, you're next. Oh, you're on mute, Paul, so we need to get you off. I think you're off mute now.
I am, yeah. Good.
Yeah.
Paul DeRitter. I'm a physician by trade, but a bioventure China venture firm, consulting firm. Do work with transborder transactions, China and US. I'm in Newport Beach.
Oh, great. Nice to have you here. Join us, Paul. Zhen Tong, you're next.
Yes, hi, Shen here. I'm currently I'm a managing partner of Future Co, primarily focused on Full Future Co, which is the accelerator. We also have a investment platform that has our own fund and syndicate, and my family still rest of the family based in Beijing and Shanghai, so I have a portfolio of Chinese investment as well. I'm in New York City. Thanks.
Oh, nice to have you here. Join us. Jimmy. Oh, you're on mute, Jimmy, so we need to take you off mute.
Hello. Hi, this is Jimmy. I'm the partner, auditor, consultant for JLKC CPA, a PCOB registered firm based in New York and China, and I'm calling from Malaysia.
Mm-hmm. Oh, wow. Nice to have you join us. James, James Bickle. Yeah.
Yep. Hi, I'm Jim Bickle, chairman of Redwood Group International. We're financial consultants, mostly in Asia, with offices in San Francisco and Beijing. And we've worked with Dan McCleary and Bousted for many years.
Oh, nice to have you join us, James. Julian.
Oh, hi, good evening, good morning. Julian Ha, my day job is I'm a partner with an executive search firm called Heidrick & Struggles. I've had the pleasure of knowing Dan for 20 years, Dan. Do you believe that? When I was based in London and Dan was already in this business of helping companies go public. So pleasure to be here. I'm calling from right outside the DC area. So thanks for having me.
Okay. Yeah, I skipped Miro. I'm sorry to skip you, Miro. We're up next.
Hi, everyone. I had some audio difficulties in connection. So my name is, full name is Miroslav Visek. I am a senior advisor with the Gulf Trade Opportunities Fund that's headquartered in Kuwait, and I am based in New York. I focus on structured credit, all type of products, mostly ABS and CLOs. And I spoke like a year ago on the first structured finance conference in Beijing. I was on the panel about CLOs and project finance, and I was looking forward to the next one, and we'll see when it's going to happen. But it's great actually to meet all this diverse group of people, and I look forward to connecting with everyone. Thank you.
Great. Great. We have, I just want to remind everybody else, we have quite a few people that have not put their camera on. And just to make sure that you want to participate in the discussion, I'm going to ask you to take your camera on. If not, we're going to move on to Dan. But I see Nan. I'm going to give Nan, if you want to introduce yourself.
Hey, I'm Nan Shen. I work at Highlands. We are one of the largest privately held commercial insurance company. I work with corporate clients on designing a commercial insurance program. In particular, the public D&O insurance for the companies listed here. And we also have a China practice, working with a lot of Chinese clients when they're investing in the US. And I'm based in New York. Very nice to meet everyone here.
Very nice to meet you too. And thank you for joining. I don't see anybody else that are putting on their camera. So for the purpose of time, we did this in 13 minutes. So great job, everybody. I know that's it's always a challenge. We did this the first time and we ended up everybody making an introduction and an hour went by and we were done. So want to make sure that we get some in from Dan. I'm going to hand it over to him. I've known Dan for, it sounds like a lot of people know Dan. He's one of my favorite investment banks that I know, and I've known him for now, I think almost over 10 years. So when we come up with this idea on this topic, he was the first one I thought about, and I'm excited that he's going to shed some light to it. And how this is going to go, he's going to kick off with so a couple of slide decks for give you some data and some information, and then we will have questions, comments, and have you all participate. We know who you all are. There's, as you can see, there's some great people on this call so I'm grateful for that as well. And I'm sure you guys are too. So it'd be great to hear from all of you guys because there's some great experts with some great knowledge on this call as well. So with that, no further ado, I would hand it over to Dan.
Great. Thanks, Marianne. And I just want to, on behalf of everyone, really thank you for putting this together. I'm going to sort of imagine that I'm on the rooftop of your townhome in Lower Manhattan, and we're outside, maybe having a beverage and talking amongst friends, and just really sharing information. And just so everybody knows, there's 7 more events coming up from Contact Source. And Marianne will, of course, email you. You can post it on LinkedIn. But there's a lot more good content. I'm sure a lot of you have topics to share as well, whether it's this evening or this morning or on the next one. So thanks, everybody, for being here. Really pleased with the turnout. I think it's an attendance record for a Contact Source event. And you've already seen this high degree of interactivity that Marianne brings to putting people together. It's a little bit unlike a lot of these kind of boring one-way Zoom events that we've all participated in during, the last 3.5 months of what we call the new abnormal. So many of you have great familiarity with the topics I'm going to go through, and what I'm going to do is flip through about 6 or 7 slides very quickly, and then we're going to throw it open for questions. And I may end up calling on various people that are already in the audience to answer some of those questions because we have people here that really really know their stuff. So if we could just go to the first slide, just the cover slide, we'll start there if you want to do the shared screen. I think where I'm going to start the whole conversation, which is about, what are some recent developments and major factors that are impacting Chinese companies who are looking to list in the US and now perhaps looking to list elsewhere because of that geopolitical situation. If we want to start with a catalyzing event, it's probably the 1st of April when there was a run on Luckin Coffee. And it probably then moved on to the 8th of April when they were suspended. And then that really got people more fixated on, what the heck is going on with these Chinese companies? Is there another scandal? Is this, a major incident? Is there more to come? So that sparked a whole series of events. And let's go to the first slide. So what happened after, let's go to the next slide, please. What happened after the Luckin Coffee? Well, Jay Clayton from the SEC decides on April 22nd that he's going to make a pronouncement, which is about the heightened risks of emerging markets. And there was no direct mention of China, but it was completely understood that that's what he was alluding to, and that's what he had in mind, and he really wanted to make a statement. Now let's flip to the next slide and see what that triggered. Well, then you have, on May 11th, President Trump, as part of his ongoing, I'll call it China-US dialogue, says to Larry Kudlow, hey, listen, write a letter to Scalia, who's the Secretary of Labor, and tell him there's no way I want them investing any public pension plan money in Chinese equities. I just want it to be verboten. It's completely wrong. Don't do it. So he sends this shell across the bow, which is a message not just to the NLRB, the National Labor Relations Board, but kind of to everybody that's listening here. And again, it's about $4 billion in assets. So let's go to the next slide and see what happens after that. So after that, NASDAQ decides, you know what? Let's go on record and propose not one, not two, not three, but let's propose new rules to the SEC. And again, we're not going to say it has to do with China. We're going to talk about a new definition. And it's companies that come from countries that we're going to consider restrictive markets. Restrictive markets meaning mainly there are what they call blocking statutes, which don't allow inspections of regulatory bodies. And in this case, it's firmly about the PCAOB. So NASDAQ proposes these three rules, mentions nothing of China, but they have China written all over them. Let's go to the next slide. We then finally have Senate Bill 945 pass, unanimously. And that bill was basically taking and codifying some of the things that have been mentioned for a long time. The main takeaway and the headline, of course, that it garnered was bill passes that will delist Chinese companies. Chinese companies who are traded on US exchanges will become delisted. And of course, that was the headline soundbite, but you really had to dig deeper to find out it's talking about auditors from the PCAOB who are not inspectable because China, of course, as a matter of sovereignty, does not allow foreign bodies to come into the country and order exams and the production of documents. Now, there's a 3-year phase-in until any delisting would happen, but all that was missed, and it was the headline that everybody was going after. So let's flip to the next slide, where I'll give you a quick recap. It really is a lot of the bark being worse than the bite, as we would say, and there is a whole lot of room for maneuver here still. And I'll give you just a few pieces of feedback very quickly when I say that. Number one, the clarity that we have now from NASDAQ with these 3 new rules is refreshing. It is something that's been greatly needed. The subjective procedures that NASDAQ would apply for new listings, especially for Chinese companies, were somewhat arbitrary looking or sounding. Now they've been codified. Now we know, if you want to list, you have to jump this high. And if you jump that high, you'll pretty much be listed. And again, these are in areas like, if you don't have an inspectable PCAOB auditor, you've got to have serious talent, serious outside experience, serious people on your board that can help you navigate those waters. You need to raise at least $25 million or have a 25% public float, a real, actual public float, not insiders and affiliates. And so the backdrop to these new rules being proposed was seemingly very negative. It'll be interesting to hear from the other participants here what their thoughts are. I take it as very much a positive. It's allowed deals to move forward. The other irony is that the auditors who get most frequently cited and who would actually be affected by Senate Bill 945 are those who are among the big 4. So there are national, international, and even regional firms that are registered with the PCAOB that are completely inspectable, that will have no issue continuing to be auditors of Chinese companies. But that really wasn't heard, that really wasn't paid attention to as much. Let's go to the next slide. So I'm going to touch very briefly before I turn it over to questions and the rest of the group on 3 important developments in a related space. So this one you'll say, hey, I thought we were going to talk about Chinese companies listing in the US. What's this about, you know, Segway 9bot listing on the STAR market in Shanghai? Well, I bring it to your attention because it's very noteworthy. So of course the STAR, the science and technology market, is a new exchange that's been started on the mainland in China, and it's designed to be a NASDAQ rival. And they've used that illusion with other exchanges and other efforts before, but this one really seems to have some teeth. And it was great, and several companies listed, and with nice valuations, nice fundraisers. But what happened with Segway 9bot was extraordinary. So Segway 9bot, at the bottom of the capital stack, is a Chinese limited company. However, it had created an offshore, international investor-friendly structure because it had contemplated either an international listing or just taking on international capital. So guess what? STAR allowed Segway 9bot to list, even though it's a Cayman Islands company, okay, very interesting, and it has a VIE, a variable interest equity method of controlling the companies underneath it. Extraordinary, highly unusual. They raised almost $300 million. So is this a sign of things to come? It's very interesting. Or was it done out of convenience because they really wanted this company and they didn't want to dismantle the offshore structure? They end up listing. I think it's super important. Let's go to the next slide. Then we get another listing thing in London using the London Shanghai Connect, which is set up between those 2 stock exchanges. And this is for a big onshore insurance company, China Pacific. They raised $1.2 billion in GDRs. Remember, the first issuance under the London Shanghai Connect was done a year prior, and that was with Huatai, where Huatai pioneered this channel, which allows capital to come out of China and invest in things that are trading elsewhere, in this case, specifically London. So a second deal gets done. Does that mean London's opening up? Does that mean it's potentially a more receptive place to list Chinese companies? Maybe the case. We happen to have an office in London. We're regulated there by the Financial Conduct Authority. We think there's going to be movement of Chinese companies to London. And then let's go to the final slide. And after that, we'll turn it over to questions. So in a nod or an acknowledgement of perhaps a softening of position, back on June 21st, Mr. Lee from the CSRC said, you know, we're really open to this closer cooperation. We just want it to be with the bodies themselves. So basically, if you come to us as a CSRC, we'll hold you by the hand, PCAOB, and we'll take you in there and do what you need to do. We just don't want you to be the lead. We don't want you to be doing it in the first person. Do it with us. Now, whether that is something tangible and something's really going to come to pass, it's anybody's guess. But I think just making that acknowledgement speaks volumes, because China has come off what was otherwise a pretty hard and a pretty serious stance. So that's the end of my slides. Those are the main points that I wanted to touch on. And many of these events you have all followed in the news. You've come to your own views and conclusions about. Happy to take questions. Happy to hear from the audience and share some more information amongst everybody.
And thank you very much, Dan. And how we're gonna do this? We thought, you know, since we usually do these events with only 20, it's easy to kind of chime in and raise your hand. If you have a question and don't necessarily want to say it out loud, you're welcome to sort of raise your hand and say, hey, I have a question or I have a comment. We have a couple questions that did come in. And Bob, I see you raised your hand. But make maybe a comment in the comment section to all that you would like to say something, and then I'll call you up, being that we are the group of people that we are. So if you have a comment or any, or even comment to some of the questions that are being said, because again, this is a platform to create the dialogue, and this is what this is. So Bob, I will start with you. You raised your hand.
Thank you. Dan, one of the things that you're certainly aware of, and I think most of us are, is that virtually every Chinese company in the past has been PCAOB audited. And so it strikes me, and this is where I'd love your feeling, that a lot of the noise we're getting from the US regulators is politically motivated rather than financially motivated. And I really appreciate, you and I have spoken, but I've never really discussed this specifically with you because they already comply with the US accounting rules for the most part.
Yeah, that's true. I mean, this has been the case. This is a decade-long situation. And it's absolutely, in my opinion, politically motivated. You know, we're in the midst of an election year. A key part of the Trump platform is against China, as opposed to running against candidates or perhaps even other issues. So it is absolutely, the volume has been turned up. I think it turns down post-election, whoever wins. But, you know, I guess one thing that I'd like to do is just if Julian Ha is still on the call, he's sitting there in Washington, D.C. He hears and sees these things. Do you have any perspective on this, Julian, on the political environment, how that's affecting and influencing what's going on here? Is there anything you'd want to share?
Sure, Dan. I agree with what you just said. I think right now, you know, in the lead up to November, the rhetoric on both sides, unfortunately, is going to get more heated before it cools down. You know, I have been in some discussions, not private, but, you know, sort of public forums with Lighthizer and other folks that are, you know, close to the U.S.-China relationship and how it plays out. And I'm hopeful that things will get better, but I don't think it's going to get better until November. You know, whether it's a second term for this administration or a first term for the Biden administration, I think they both realize, both teams realize that, you know, the U.S.-China relationship is just too critical to screw up. But right now, you know, both sides have to use this for their own means to you know, sort of get through November. That's kind of what we're seeing in DC a little bit.
Thanks for that, Julian.
Sure.
Mm-hmm. Well, another question that come in, if there's any one of you that have seen any of the Chinese companies that tried to list or complete an IPOs in the US since the NASDAQ proposed the new rules to the SEC.
There have been several. Actually, there have been several. Is Tony Tian on the call? I know you didn't get introduced, Tony, because we didn't see her picture, but does Tony Tian happen to be here? He's a wealth of information on this topic. Maybe yes, maybe no. Is Tony with us? Tony has a great firm called Tian, and he actually puts out every Friday a compilation of all the news about every U.S. listed Chinese company, WIETIANIR.com, and Tony's phenomenal. So we've seen several Chinese IPOs. Again, at Bausted, we're an IPO underwriter and NASDAQ sponsor. Last year, we underwrote 10 IPOs. 7 of them had something to do with China. We got out a small IPO within a week or so of the new NASDAQ rules. And it certainly didn't have those proposed rules apply to it. It got done. It's traded down in the ensuing couple of months since then. There have been a few deals. One, uCloud Link. So uCloud came out, went down significantly, has started to come back up again. Another one, which is called eBang. eBang is another, started out, it's a Canaan-like company. So it was making Bitcoin mining machines. It's kind of reinvented itself to be more of a chip company. It was down precipitously. There are a few that are teed up right now. So there is a gay dating app called Blue that's supposed to price tonight or tomorrow and list, and they're going to raise, I think, around $100 million. It's getting some good uptick and receptivity. So maybe there's been a half a dozen that have come out, and I think there's been a SPAC or 2. So virtually all of those companies were under the old regime, the old rules. They were so far along in the process, there wasn't any modification. And most of them have been of fairly significant size, say 40, 50 million or above. So they would have probably met those rules anyhow. So to that question, Marianne, the deals keep coming. Yes, I think Chinese companies are slightly re-looking whether or not they want to subject themselves to the U.S. environment. But those deals were advanced in the pipeline, and I think we're going to keep seeing them throughout the course of the year.
Mm-hmm. And one question came up from Steve Singer. He's asking if are you seeing many Chinese companies being acquired by the U.S. company to avoid the public markets?
We've probably seen an attempt at more of the opposite, Steve. More of one of the things that NASDAQ has made as part of the platform now with a listing for a company that comes from a restrictive market is they like to see a U.S. nexus. So that has motivated some Chinese companies to start thinking about, opening an office, having suppliers, customers, executives, and perhaps even acquisition targets in the U.S. And maybe that was already in their thought process, but perhaps NASDAQ saying we think this is pretty important because we don't just want companies that are seeking capital anywhere to show up here for no other reason. And again, you won't find that otherwise in any requirements, but if they think a company is a little light in some of the other areas, they'll really emphasize the U.S. nexus. So in terms of in the other direction, I haven't seen a whole lot of that. Maybe the most visible deals have been recently in financial services, where Goldman Sachs and Morgan Stanley have bought back. They've changed from minority ownership to majority control in some of their China-based joint ventures, but those were already Chinese companies. They just had increased U.S. ownership that was applied because of a change in regulation in China that allowed them to do that.
Mm-hmm. Well, and by the way, Rob has a question. Before that, I just want to go into which you talked a little bit about the STAR market, and I have a question is if we think that there are more Chinese companies that are delisting from the US and are delisting in China, like in 2015, and then also kind of looking at the STAR market in Shanghai, if it's a real competition for NASDAQ, so kind of you can maybe take that, or is it another channel, if you can take those maybe questions together?
For sure. So the delist, relist trend has been more Hong Kong focused so far. There have been one or two that have shown up on Shenzhen or Shanghai, but it's for the most part been about Hong Kong. And rather than a flood of delistings, what we've seen are 4 or 5 very high profile dual listings that have taken place, maybe just as a way to hedge a company's bet and certainly to avail themselves of more capital in a market that might be more familiar or perhaps even more friendly to them. So the rush of delistings has not yet started. It may, but right now it's more of a trend towards dual listings into Hong Kong. STAR perhaps could be a beneficiary of delistings. I don't think it would be appropriate for dual listings, but it could be a beneficiary of companies who actually come off the exchange and then decide to reemerge, especially in the technology space.
Mm-hmm. And somebody like Charles wanted to know, what about the OTC market? Do Chinese company want to list it on the OTC market?
It really is somewhat size and budget dependent. We see some flow in the over-the-counter markets in the US, and there's sometimes a rationale for doing that, but oftentimes it's cheaper, faster, and probably better, as I like to say, to open on Broadway instead of off Broadway and just go and list on NASDAQ. And I could say that more emphatically until NASDAQ really dug in and became sort of anti-China. But now that they have the new rules, so with the new rules, that will cause some deselection from NASDAQ, because if a Chinese company can't raise $25 million and they don't want to give up 25% free flow because they want a higher valuation, they may in fact decide to go to the over-the-counter markets. That was really more prevalent in what I call China version 1.0 from say 2004 to 2010 or 11, when everything was reverse merger and OTC driven and companies uplisted from there. Now it really is about primary listings and prototypical traditional IPOs.
Mm-hmm. So Shen Tong wants to know what happens after November. This time seems very different on both sides.
I think that the rhetoric cools after the election. I think, and again, whether it's Trump or Biden, I think there's going to be a different tack. I think this is getting very exaggerated for political purpose. And of course, hopefully COVID is in the rear view, and any real or imagined animosity as a result of that also starts to fade. So I don't think it's long lasting. I think if anything, that the capital markets, which is what we're talking about now, they are starting to understand that Chinese companies have options. They can return to Hong Kong, they can delist, they can go to London. I think Trump even mentioned it when he's made some of his pronouncements. We don't really want to ban Chinese IPOs in the US, they'll just go to London. So, but I think the rhetoric decreases, it gets less caustic, and a way forward is understood.
Mm-hmm. Yeah, I will hand it over to Rob. I know he had a question, and I'll let him share his question in person.
Thanks. Thanks, Dan. Just two quick thoughts. One is, did you share, or can you share a little bit of post-IPO or just listing return data? That's one. And then secondly, the talk about Washington, if in fact, China and other areas are going to be sensitive spots towards a particularly presidential campaign and presidential election, but no matter who's elected, once you're in, you've got a honeymoon period. So it would seem that the rising tide is going to help all. So wouldn't sort of post November be a strong time to get bullish no matter who wins here, because you go from managing a campaign to actually having to deal with global supply chain and having to deal with global trade, et cetera.
Great. No, a couple of really good questions and observations. So to answer the first question, which, kind of how have things worked out with these Chinese companies who have listed here, what do the returns look like? Invariably, on an overall basis, if you did a composite of the Chinese IPOs in the US in the last year, they are down. They're definitely down. And that's for a variety of reasons. One of the factors that I'll mention, which is kind of the dirty little secret, if you will, about Chinese IPOs in the US, contrary to the conventional wisdom, or maybe even the fake news, or maybe even the Trump pronouncements, Chinese companies are not ripping off the US capital markets. They are bringing their checkbooks to New York. So every single IPO from a Chinese company that's been done literally in the last 2 years had the majority, sometimes the overwhelming majority of its investors coming out of Asia. So all of the capital origination, the great majority of it, is coming from somewhere else. The money from Western investors may be a little bit on top. Sometimes Western investors have been shut out of deals. Certainly participation in the aftermarket and in follow-on offerings if those companies traded and traded up and were seen as good opportunities. So the reason I mention that as a backdrop to answering the first part of your question is that a lot of the Chinese investors who have backed the Chinese IPOs, they have a different view. They're not short-termists. They didn't do this because they wanted to see a return on the first day of trading. They see this as a journey, and getting the Chinese companies listed in the US fulfills many important priorities. Some extremely tangible, like perhaps raising capital. Some less tangible, like prestige, like government recognition, like status with suppliers and clients, like notoriety in their particular industry. So I think what you've seen is, while maybe some of the Western investors have sold out and run down prices, I think that the Asian investors are hanging in there and in general supportive of companies. That's one way of looking at it. Another way of looking at it is perhaps some of these Chinese companies haven't been as good as they should about creating awareness, communicating with investors, being available, attending conferences, which would of course be virtual now. So those are the things that are, but make no mistake, total returns down significantly on an average basis. I'd say in the neighborhood of 15 to 18% for those IPOs that have taken place, some even more. And of course, there's some exceptions of companies that have gone up. In terms of the second question, won't everybody sort of just find a way to get along and kind of bury the rhetoric coming out of this? I think that's the case. I think whether it's cooler heads or an assessment of, this incredibly important relationship that the U.S. has with China, it can't be just pushed off to the side like that and used as so much political bargaining leverage. And, you would hear this from people who run the stock exchanges. China's a huge part of their business, that new listing business. People like Bob Greifeld, whose book is behind me, you know, the first time he went to China, he said he was treated like a rock star and he had paparazzi following him around. And it wasn't because he was Bob Greifeld, it was because he had the name NASDAQ. And that's a brand that's aspired to. So I think that kind of somewhat of a return to normalcy is going to set in. And like I said before, if it doesn't, you know, Chinese companies have options. They can go other places, they can delist.
Yeah, we have a question here from Fred Wang. And also, if you want to make a comment or make a section, you can put your name up there, and I'll whether you say a comment and your name, and I will call you out. Might be the easiest way. But Fred Wang was asking, how much real U.S. capital can small or medium cap Chinese companies really raise in the market situation besides their friends and family money?
Great question. And I mentioned it before. I mean, you know, sort of the, you know, the mantra, you know, Mr. or Mrs. Chinese chairman, if you want to list in the U.S., it is, you know, bring your checkbook. And again, this is from bulge bracket deals that are raising hundreds of millions of dollars down to, you know, IPOs that are raising 5 or 10 or 15 or $20 million. So that's a really important consideration. There is not, you know, a room full of white guys in New York saying, let's find the next Chinese company to invest in. But there is a room full of people in the West that if they see momentum behind an IPO coming out of China, will want to jump on that bandwagon and jump on that train. So I think if Chinese companies aren't able to organize a certain amount, that's probably at least half of the funding for their IPO coming out of China, they probably shouldn't start the process. But one of the things that we've learned as one of the underwriters and NASDAQ sponsors in this space is by surrounding yourself with quality advisors, many of whom are represented on this call, from auditors to law firms, to investor relations, to research, to independent directors. We have some really brilliant independent director candidates and actual independent directors as they've introduced themselves on this call. That's a way to be convincing with investors that you already know. So a lot of investors are circling Chinese companies. They're just looking for that liquidity event, and they're looking for the credibility and comfort that it's actually going to happen. So when collectively all of us in this call show up in the room with a Chinese company talking to their Chinese investors, it's a whole different conversation. You know, they're much more inclined to say, you know what, I'm going to get behind that IPO than if it was the Chinese company trying to either do it themselves, go via the OTC, or file, you know, without an underwriter or without quality advisors. So I think there should be very little expectation of getting the initial capital to come from Western investors. I think that capital will follow once they see momentum, and companies should definitely keep that in mind before they embark on the process.
Yeah, no, you get a lot of good compliments. Well said there. A lot of people are making comments that great comments. We have Vincent Wong is having a question here. Under COVID-19 travel restrictions, how would you advise new issuers with executive teams in Asia market their offering pre and post IPO?
Great question. So, I mean, first of all, I'm just going to thank you again, Marianne, for doing this event. Thank you for having people put the camera on, and thank you for having other people talk. I think it's just been phenomenal what this, you know, post-COVID world has done for all of us. I mean, it's taken things like Zoom and Teams and Meetup, and it's just brought them all into the mainstream. So I think we've now all convinced ourselves that it's phenomenal to be there. I mean, I was in China 14 times last year. I mean, twice in January, and that's great. But you know what? We can do a heck of a lot in virtual formats like this. So those IPOs I talked to you about that have happened for Chinese companies in the recent couple of months, they were all done virtually. There were some smaller scale events in Hong Kong where portions of a management team or one or more of the underwriters was already there. But as you all know, I mean, there's even still some travel restrictions within China. So even if a Chinese company wanted to travel around, you know, if you want to come out of Beijing, forget about it nowadays. You're going to wait a couple of weeks. So we're in a new virtual world, and I think it's great because we can show how effective it can be. I'm going to say that the bigger impact hasn't so much been in the road showing and the capital raising, but it's been in things like audit. You know, sending an audit team in and out. You know, there are auditors on this call who have teams that work out of the US. And so they've more than ever had to rely on colleagues and alliances and contractors that are already on the ground in China, because you're not going to ship people from New York or LA to China nowadays to go in and do the audit. So I think in some of that, the preparatory work, so the auditing, the due diligence, the legal verifications, that's where we're seeing challenges, because that stuff can't be done virtually. I mean, you got to be there. But I think we've got the road show, we've got the capital raise, we've got the investor pitches. That's a much more manageable thing, because we have several investors on this call. They could perhaps give us their feedback. There's nothing like meeting a management team and looking them in the eye. But guess what? You can ask a heck of a lot of questions, using video conferencing and get to the bottom of a lot of issues.
No, I see myself that even for this call wasn't, even with the new virtual world we're living in, the opportunity to really connect and really expand. And I would think that's the same for issuing of capital, like the expansion of the people that you can connect with. So I don't know if anybody has any comment on that and what they're seeing from an investment perspective and how that has impacted the way that they do business now during and post-COVID.
Yeah, I mean, we have several investors here. They're, we have buy-side folks, so they might weigh in and say, hey, Dan, you're completely wrong. If I don't meet somebody, I don't write them a check, but they may say something else too.
Yeah. So if anybody has any comment, I'm not getting any. I know Rob's suggesting Jen to ask a question live. Jen, if you want to ask a question or make a comment. Well, I know Shen mentioned a comment here. I don't know if you want to say that. Shen Tong, do you want to make your comment and make it sort of a live comment? Did he drop off?
I think he dropped off. Yep.
Oh, he might have dropped off.
Do you want to read it, Marianne, and we can respond to it as if he's here?
Yeah, I'll read what he was saying. Wanted to add him. The repeated mistake the West makes in overestimating the power Chinese entities has, money, internal markets, other options, and underestimating the determination.
That's quite an interesting statement. I think I would tend to agree with parts of it. I mean, never underestimate the Chinese, right? It's hilarious the other day, but if people haven't done a lot of business with the Chinese, they have a certain perception. And I'm working on my first Israeli deal. And I've got to tell you, the other day I said to this Israeli CEO, I said, we have Chinese companies that can do what took you weeks to do in a couple of days. What's wrong with you? You have more Nobel laureates per capita than any country on the planet. And he thought it was a joke, but I was actually being serious to him. So yeah, don't underestimate the determination of the Chinese. Don't underestimate their ability to assimilate, adapt, and get things done. Completely agree with that statement. The overestimation of market potential, financial strength, and wherewithal, I mean, I think that's situational, right? I mean, there's plenty of people in the USA that blow smoke and talk big and pretend like they've got all kinds of stuff and they really don't. You have to be discerning wherever you go. I don't think that's necessarily symptomatic only of China.
Mm-hmm. Yeah, and we have Frank said, having a question here, will SPACs be playing a role in the way that China companies decide to come to market?
Thanks, Frank. That's a good one, because one of the most vibrant areas of the IPO market have been SPACs, or special purpose acquisition companies. They're very much in vogue right now. There's a $3 billion SPAC that's gone out there. There have been massive SPAC reverse mergers for Nikola, DraftKings, all manner of companies that have had huge run-ups. I think the important consideration is the following, that although the perception is a SPAC could get you public more quickly, it's certainly not a way to avoid the ultimate scrutiny and qualification that Chinese company or whatever company merges is going to have to go through with the stock exchange. So it gets you an admission ticket that opens the door sooner, but you're going to have to go through the same qualification process for management, market cap, working capital sufficiency, PCAOB auditor, qualification, inspectability, all those things. So I think SPACs will continue to be utilized because they are perceived as being armed and dangerous pre-funded, although a lot of the funding gets redeemed out and never stays for the business combination at the end. But I think a misnomer is that you avoid the NASDAQ process. In fact, you just invoke it at the time that you announce your merger, and they're going to assign an analyst and go through a file and make sure that you meet all the requirements. I do think SPACs will continue. I'm still looking for ones that have permanent capital. Many of them, it's transitory capital that gets redeemed out, and they have to raise additional capital in order to complete the business combination. Those high-profile ones I mentioned are completely exceptions to that. That capital stayed. But many of the $100 to $200 million SPACs, it's been kind of a mirage. We have the capital, but we really don't because they're not going to approve that transaction. They just want their money back after 1 or 2 years.
Yeah. So we have one last question because we're running out of time, and it's a question that came in from Steve Markscheid. And I kind of missed that, so I apologize, Steve, because he was the first one throwing in a question into the hat. So I will do that and make that our last question for everybody. And he says, I agree with the CRSC wishes to compromise, but your point about most companies audited by Big Four auditors, doesn't that elide the fact that those auditors are not Big Four, but rather local affiliates of the Big Four, which are functionally and legally separate from the actual US firms?
Yeah, thanks for that, Steve. And I think you've been unmuted, so if you want to elaborate more, that would be great. I completely get your point, but if you want to state it any differently, otherwise I'll respond. For those of you that don't know, I think he introduced himself this way, but you know, Steve has quite a background in having run audit committees and being active as a lead independent director on boards of various companies, including Chinese companies. So he knows what he's talking about here. Did you want to add any more, Steve, or are you okay if I go on and respond? I'll go on and respond.
Go ahead.
Okay.
Thanks.
So Steve's absolutely right. Post Enron, post Arthur Andersen, the Big Eight, now the Final Four, decided to come up with really a decentralized structure. So it's a brand and it's a name, but they're all separate, barely even affiliates. So they are separate legal entities that exist in various parts of the world. So you could sign up with, you know, we've worked on a deal with Ernst & Young in Beijing, and, you know, you could use PwC in Shanghai, and you could have BDO in Nanjing. It runs the gamut. So those entities are typically separately and directly licensed and regulated by the PCAOB. So there's not an overarching license for all of PwC. Each one of those stands on its own. So you very well can have situations where a Big Four auditor is licensed through the PCAOB inside of China, and therefore they are uninspectable. So that's the big problem. And the Big Four thought they solved it and worked out a deal with the PCAOB a few years ago. They didn't. It's certainly heated up now in all this geopolitical tension between the US and China. So that's the conundrum. It really is. Like, hey, I'm legit. I'm a Big Four auditor. Yeah, but, you know, you're licensed with the PCAOB for your Shanghai entity, you know, not for the mothership in New York or not for an affiliate that is inspectable. So, but perhaps what you're getting at, Steve, is wrapped within that is perhaps a way to solve the problem, which is perhaps to involve other auditors who are in inspectable jurisdictions for that same Big Four firm and have document sharing. But it will never be perfect unless you have, you know, all the documents, you know, everything is uploaded to the server in New York or London or wherever it might be. Otherwise, you know, you just won't have the data that needs to be inspected when the PCAOB comes knocking. So good point, very good precision about exactly what the issue is.
Thank you. And we have 2 more questions if we can bear, and we have like 5 more minutes. So Regina Leung is having a question, and if she wants to, she can step in and share that herself, or I can read it.
No, Regina, let's hear from you.
Yeah.
Yeah, so just preface it, I'm originally from Hong Kong, but I've lived now in the United States 30 years, so I'm a little bit distant, but just knowing that, you know, decade ago or 2 decades ago, right, when China really just started to open up, the flow of capital has come directly. Now, you know, more recently through the Hong Kong, you know, connection, but now given the new law that just went in and just got passed, I'm just trying to understand how is this affecting the flow of capital to U.S. Given the recent developments from an investor's perspective. If you can comment, that would be great.
For sure. And again, you're raising a really good point. And I would submit that even before the new law, the ability to move capital from Hong Kong to the U.S. was getting increasingly more difficult because of information sharing back to the mainland. So, you know, via the central bank and the monetary authority. So we started to see it constricting perhaps 1.5 years, almost 2 years ago. It used to be if mainland investors compliantly got their funds to Hong Kong, then it was a relatively smooth path to the US. And it's not. It's slightly easier, but it's almost the same thing nowadays. So that, I will say that that's probably one of the single biggest challenges for completing a Chinese IPO in the US, especially when a lot of the capital is organized by the company in sort of a friends and family way. These sometimes are not internationally sophisticated investors. You know, they might only have their $50,000 annual exemption, which is going to take forever to fill up an IPO if that's all that is. So we've seen some other channels that have come into vogue and come into usage, Forex contracts. We've seen the ability, you know, certain QDI investors that have status within China where they can compliantly send money out of the country. So maybe they aggregate funds on behalf of investors and they compliantly get the money into the US IPO, and then they eventually sell their shares or get liquidity, and then that money somehow gets its way back to the onshore investor, again, in a compliant way because they gave RMB to somebody who could take RMB and they didn't export capital like they're not supposed to do. So it's a major challenge, I'll put it that way. And you're absolutely right that Hong Kong is no longer the panacea or the open field like it used to be. And, you know, it's part of the, you know, coming together, if you will, of those systems, those authorities, and those capital restrictions.
Thank you.
Yeah.
Sure.
Thank you. And Steve Singer has, I guess, last question now. I'll let Steve go in and share his question himself.
I just wanted to, you know, when we're going to these virtual environments on Zoom, everybody's getting burnt out. And I'm kind of wondering what you're recommending in terms of the roadshow presentation that you're giving to your customers or advisors on how to make a successful presentation using these platforms.
Great. No, again, that's a really good question. What I have seen, and I mean, we've all had our experiences in live physical road shows, and you know, it's the people, it's who's doing the pitching. But I have seen a real effort on the part of companies to get a little more entertaining. So I've seen, you know, the use of an intro video. I've seen having perhaps a customer, perhaps an existing investor, perhaps even a supplier or a lower level employee participate almost in the form of doing a testimonial. And of course, these things have to be somewhat tightly scripted because they're all subject to testing the waters guidelines. And in some cases, these presentations become free writing prospectuses. But as much as the virtual has stopped us from doing the live face-to-face interaction, I've seen companies get creative with what they do in the Zoom environment. And this is going beyond like, you know, a slickly produced net roadshow presentation. I'm saying that companies, along with their IR counsel and other advisors, are really jazzing up these presentations. So they're looking for ways to pull people in, to make them more engaging, for it not just to be, you know, next slide, any questions. Because they understand that as much as you have kind of greater access because of Zoom, you've got to grab people. Otherwise, Steve, that Zoom burnout, you know, and this is, you know, call number 47 in a 58 call day is going to set in. So the better companies have gotten more entertaining and more engaging.
Well, thank you so much, Dan. I think we can all agree that this has been an incredible an experience and learning, and thank everybody else, because this was incredibly interactive. Great question, everybody. It was fun. It was fun to navigate. We haven't done it with that many people, so the people that did participate with their faces and their comments, a big thank you. And for everybody else that just listen in, that's okay too, and hope that you get some value. Tomorrow morning at 9 a.m., if it's of value, we're having, not as good because it's not Dan McClory that are speaking, but we do have similar topic specific to life science and the impact of the community or the industry post-COVID. So we have a couple of people that are bringing the light of that topic, and we'll probably have about 20 people discussing it. If that is of interest, you can, you all should have received my email with all the participants, so have a check on, look at that. You can email me back and we will have you register. It is tomorrow morning at 9 a.m. And we'll also send you a list of all of our events that are happening. If you guys like this, welcome feedback. If you guys have thoughts of interest in creating a specific topic that could represent yourself, we thought this seems to be a popular thing to do more international. So again, the world gets smaller, and it's a great way of connecting worldwide. So thank you, everybody. And for those
and
of you.
Marianne, thank you for making this as interactive as you did. It would have been easy just to have, you know, a one way, and it wasn't. And by the way, happy to share, if it's of interest to anyone, the slides that we used, and also to send around that resource from Weetian, which lists all the developments every week of every Chinese company in the form of whatever releases they put out. It's just summarize them in headline fashion. So I'll get you those materials, Marianne, and if anybody wants those, happy to have them shared with the group. But thanks for really making this an interactive experience.
Yeah, no, thank you. This was great. I appreciate it. And we'll send all of that out to you in an email. And if there's any update on the participants, we'll update the list of participants as well for you guys. Because there was a few people, latecomers, that registered late. So I'll make sure that they're added. So any comment, feel free to email me. I'm available. I am going to go to bed now, but you guys all have a great night or a great day if you're in Asia.